In an otherwise wobbly market, we have Interglobe Aviation, which has moved to the high point of trade, doing extremely well this afternoon. Well bid on account of higher volumes, better market share, and perhaps lower costs as well, as crude prices are lower. Speaking about crude, a lot of the other commodity prices are lower as well. We have Manisha in the studio with us. Manisha, take it away.
Well, thank you so much for that, and welcoming a very special guest. Juerg Keiner is MD and Chief Investment Officer at Swiss Asia Capital. Juerg, thank you so much for joining in here at CNBC India. Your first reaction really to tariffs and the way gold has performed really. We've seen $100 of a range yesterday, and a lot of people would like to believe that gold is kind of underperformed given the uncertainty that we have, and the safe haven buying that the markets were anticipating didn't really happen.
I think the safe haven purchasing has been starting a long time ago. I think it started in the year 2000 and has accelerated actually constantly. And if you think the dispute about these upcoming tariffs have been going on now for quite some time. So we had already a big move going from the basically low 2000s into the 3000s now. So we already done a very good 30% move. The market still looks like it wants to go further, and I think with many people still having to meet Basel III requirement, particularly the US and UK banks, the pressure on the way up is still there.
Juerg, so what is your sense on where is gold heading now? Are we looking at some more correction before we start to run up? And how far do you see on the higher side gold prices really targeting?
Look, we are trading quite a bit above the moving averages. So let's say we could have a smackdown to 2.8, 2.9. That's all possible. I don't think we'll be staying there very long. I think that the trend will continue to go up and accelerate. And when I mean acceleration into July, I think you could easily see somewhere between 3.5 and a few $100 above that for this year. And probably prices in the tune of $5,000 to $8,000 in the next couple of years.
Oh, wow. That's very bullish cues coming in for gold. Juerg, what's your sense on silver? Because that's lagged behind a bit. All-time highs are far away, but it's making it very hard to keep up with the kind of run-up that we've seen in gold. Would you say silver seems to be resembling more like metals right now rather than the precious metal?
I think what you have is a huge accumulation of silver, particularly into China. And we see people shorting the silver market through ETFs, which is basically been keeping prices down. So we have a real mismatch on the West versus East. We see as well huge spreads. So you could actually sell silver into China at $3 spread. So that tells you actually that we have backwardation in the system, that silver should actually really perform very well indeed.
So Juerg, where do you see silver going forward then? Do you think there are buying opportunities coming in here, or there's more pressure that could be seen?
Look, I think in the low 30s is a great time to buy, and you want to be testing at least the $50 mark, which is basically would be a triple top in the short term, and then we'll see where we go thereafter. But I think that's about the trading range, $30 to $50 for probably the foreseeable future.
So Juerg, while you are quite bullish on gold and silver, how would you look at metals as a space? Because the two major economies, China and US, really seem to be trade warring right now. How is that going to impact the prices here?
I think what you start seeing is that you're going to get very different prices from country to country as we're moving from a global world to a decentralized world. So your pricing might be very different places. You see with this onshoring, which happened in the United States, a large capital investment cycle taking place again, next to the one we see in the BRIC countries. So the demand will certainly be there. So I don't have a problem with metals. I think if you look at copper, it's been highly volatile this year, but it looks like it's been breaking on the way up. Palladium, platinum, which are the other two PMGs, they've been disappointing. They've continued their correction on the way down. We'll see when they will turn. They are so small, it might not really matter. So copper is only the other big metal in the room, which is really showing the sign that all metals are going to turn. If you look at iron ore, which is important from an economic activity, you're actually seeing that shipments into China are still continuing to be going at record pace, and at a time where you have military buildup, which is high for steel production. I think that shows you as well that metals should actually be reasonably well supported.
Juerg, I also want your sense on the crude oil prices, because we've seen 6% decline overnight, 1% down as we speak, and The markets tend to tell us that another 6 to 8% of a decline or even more is not ruled out. How would that augur for the U.S. shale producers then?
Look, let's say we go another $10 down because everybody's going to be afraid of shale production out of the United States. That's all possible, good and right. So that's a 10% risk on the downside. On the other side, we have a possible risk of further warfare in the Middle East and in Russia. And in case with the Straits of Hormuz going to close, then maybe your oil price will be $100 plus in no time, because there will be no shipment going through the Middle East. So your risk-return metrics is from the upside downside actually doesn't favor that the downside has so much risk over time.
So what is your targets then, given the kind of scenario that we are in right now, where we're looking at OPEC and allies increasing production, the US inventory is going higher, tariffs impacting demand going forward? How do you see that impact on prices?
So it's not very positive for the producers from that point of view. So we're not really buying the equity in the energy space, but on the energy itself, I think if you look at energy prices, they can be so different. You can have onshore supply and production at costs, which in some countries is so low you can't compete. So I think you really have to figure out where you buy it. Overall, I wouldn't be a massive buyer of energy right now. But if you are living in a specific country, you certainly should actually be looking at locking some of that in. Depending if you're a producer or not a producer, I think is probably one of the key issues.
Oh.
Juerg, thank you so much for sparing time and joining us today, this afternoon. Manisha, thank you for joining in as well. Will not be a buyer on energy at this price, but very bullish commentary coming in on gold prices, of course, and that has been the one that has been shining through and through. By the way, some sell-off has intensified on the index, though. 300 points down now on the Nifty. 22,950 is where we are, and 22,900 is the level that Manish Hatiramani was also talking about for further downside on the index. And IT is the one that has been bearing the brunt of this. Coforge is down another 6% today. Persistent is down another 5%. And Emphasis down another 5% as well. We take your leave on this edition of Halftime Report. Business lunch for the next 30 minutes.